Hello and welcome to Mining Journal. Today we're talking about copper, and I have great pleasure to be joined by Daniel Earle, President and CEO of Solaris Resources. Hello, Daniel.
Hello to you. Yeah, thanks so much for having me.
Solaris Resources has been one of the most exciting junior copper stocks of the past couple of years since you IPO'd. You've made a number of discoveries at your Warintza project in Ecuador, in addition to sort of drilling out the Warintza Central deposit that was already known. Recently, hot news, you've just announced a discovery at Warintza South. Start talking about that. What's the importance of the Warintza South discovery and within the overall complex of porphyry copper deposits you've got at Warintza?
Yeah, well, as you say, this is our latest discovery, but it's certainly not the first. So David Lowell made the original discovery at Warintza Central something like 20 years ago, just on an area of outcropping supergene copper porphyry mineralization, or supergene enriched copper porphyry mineralization. And he just did a small amount of drilling around that central outcrop before his activities were curtailed. And that's basically the data set that we inherited, together with some sporadic and sparse sort of sampling over the rest of what we now refer to as the Warintza porphyry cluster. And these sort of broadly defined, target areas at Warintza West, Warintza East, or what we now call Warintza West, Warintza East, and Warintza South. So that was essentially the data set that we inherited, and we came in, of course, and started drilling at Warintza Central, and we've pushed as aggressively as we possibly can, building out a drilling fleet of 12 rigs to try and drill off a resource at Warintza Central that would establish and underpin the economic opportunity of the entire project, but establish the world-class credentials of the project through that Warintza Central resource. So that's been a very intensive drilling program. We're not trying to, in the way that many juniors do, because of the limitations on their access to capital, drill off a relatively loosely spaced a pattern that results in an inferred resource, which it's always difficult with an inferred resource. When you're talking about the scale of investments that these projects entail, it's always difficult for anyone to really have confidence in an inferred resource. But with this company, we've always known that we had, for our purposes, essentially unlimited access to capital, and so we've gone a different route. We've from the very beginning intended to drill off a really robust, well supported by high density of drilling data resource at Central, and that's exactly what we've done. So we've essentially completed the drilling program at Central. We're waiting, of course, for assays from the remaining holes to come in. But when those come in, we're very excited to be publishing a resource estimate, which we'll do towards the end of the first quarter. So that's been by far the focus of our efforts on this project. But the other objective that we had a view of this potential, again, from the beginning. The other objective that we had was to just surface that what we view as multiple times growth potential outside of Central, but within this well-endowed porphyry cluster. This is a cluster of porphyry deposits and targets that span something like 7 kilometers in strike length by 5 kilometers across now. And so this was the second part of our effort. Because of the focus on that intensive resource drilling program, we've only been able to allocate, a single rig at a time to testing these targets. But we've nevertheless come up with discoveries at Warintza West. So this is 1.5 kilometers to the west of Warintza Central. We made that discovery and reported it in February of last year. And then in July of last year, going the opposite direction, so 1.3 kilometers out to the east, we made a discovery at Warintza East. These were, in the case of Warintza West, the discovery was just based on historical geochem. At that time, we didn't even have access to the interpreted geophysical solids, which we now use to guide our exploration at a high level and assess these targets. But certainly with East, we we did have access to that. Both of those discoveries were made on the first holes in areas that had never previously been tested. So with limited data available to us. With South, it's a bit different because certainly with East, you can see the potential with the extremes of the drill holes from East actually overlapping the extremes of the drill holes on the eastern side of Central. You can say that there's continuity between those porphyry systems, and there's certainly potential with drilling between the two closer to surface to tie together the higher grade portions, which in every case at Central, at West, at East, and now at South, the higher grade mineralization is always starting at or near surface. You've got this primary vertical zonation and porphyry mineralization. And so certainly, East would appear to be part of the same system as Central. Certainly they'll be within the same pit shell ultimately. And you can see the same potential developing at West, where with the footprint of the target at West, if we're successful in duplicating the porphyry mineralization across that footprint, then that's also going to potentially end up in the same pit shell. But whereas at South, you're dealing with an entirely separate porphyry deposit. This is 3 kilometers down to the south. This discovery, and essentially this discovery was made. We were targeting and colored the hole in an area where we'd mapped leach capping, so the weathered remains of the porphyry deposit. We had the high conductivity anomaly describing the sulfide system, which is a voluminous sulfide system in the case of South. We're talking about a body that measures 2.5 kilometers on its long axis, 2 kilometers across, and then about 700 meters in thickness. And then we had historical geochem sampling as well to work with. And so we drilled this hole, made a discovery on our very first hole. The headline interval was over 600 meters of 0.41% copper equivalent within a broader interval of 755 meters of 0.36 copper equivalent. So we're very, very happy with that discovery. And we're quite enthusiastic about the further potential, not just in terms of the size. So the dimensions of that sulfide system, implied multi-billion ton potential in this target, but also about the potential to vector towards higher grade information, taking advantage of some of the more recent surface sampling and mapping that we've done. And we released that alongside the drill results in the press releases. If you look at the plan map, you can see the result of that more recent sampling, which has expanded the molybdenum anomaly. So in this case, we've got overlapping copper and molybdenum anomalies. As in any of the other porphyries within the Warintza cluster, the molybdenum anomaly is the better guide. Molybdenum just happens to be less mobile in the tropical weathering environment, and so it's more representative of the underlying mineralization. And the molybdenum anomaly with the more recent sampling has doubled in size. It now more fully occupies the underlying geophysical anomaly, and it's shifted to the north and northwest. And so, if we had the benefit of that data, in hindsight, we probably would have drilled a hole further to the northwest at this target. But we're very happy as it is to have made this discovery, and we're well set up to try and chase the core of this porphyry system, where we may find higher grade mineralization in the future.
Thank you, Daniel. So with the resource update coming out on Warintza Central in the near future, what's the plan after that? You've got the discoveries at Warintza East and Warintza West that potentially will be in the same pit. So would the focus be on sort of drilling those out, getting those to resource stage to look at what the global resource in that part of the system might be?
So certainly with Central, we'll continue moving forward on that deposit. So we are putting out the resource, but the deposit itself will remain open in a couple of very important directions, even beyond the drilling that will be included in that resource. So most particularly to the northeast, where we've been able to, and this is something like 650 meters to the north of kind of the main east-west corridor of drilling at Warintza Central. We've been able to locate some higher grade mineralization close to surface, of course, and that's entirely open to the north, back out to the west, to the northeast and east, and so on. So we'll need additional drilling there. That'll be high impact drilling because of course, it's going to be within the pit shell for Central. So you get the double benefit of converting what would otherwise be waste to resources. And in this case, higher grade resources. That area that I talked about previously, to the east of Central, out to Warintza East, there's a 1.3 kilometer span between the two deposits, which is completely undrilled, okay, close to surface. And so we've got to get drilling locations in there. This, again, would be within the pit shell, or largely within the pit shell from Central. So you get that double benefit, that effect of converting waste over to resources. And we'd be hoping for higher grade resources, close to surface, whereas we can't drill those from Warintza East. And then also in the discoveries that we've made, we in many cases, like for example, at Warintza West, have added a significant amount of new sampling and mapping that sets up targets, further targets to try and find, higher grade mineralization within those discoveries. It's relatively easy when you're dealing with targets the size of these porphyry deposits at Warintza. These are multi-kilometer targets, with the benefit of sampling and of course these are coming to surface, so the geochemical sampling is quite a good guide in this case, and then the geophysics. It's relatively easy to get a hole into the deposit and therefore to make a discovery, but it requires more careful work and certainly follow-on work to try and vector towards the high-grade cores of these deposits. And we've done that work now at Warintza West. And so we've got an opportunity to go back there and try and get in towards this higher grade mineralization. Likewise, the same thing at South as I just described. Okay. In addition to that important drilling at Central and East. So that'll be the exploration program. It's less intensive in terms of the meterage that we're going to be trying to achieve this year, but it's certainly very high impact in terms of what the implications are. Okay, so that's exploration, and then alongside that, of course, we've got a robust technical program as well, because we're trying to advance the Central deposit as quickly as we can towards economics, and this is proceeding under the direction of Chad Bullihan, our VP projects. And Chad came to us from Ivanhoe Mines, where he was responsible for the basic engineering through preliminary and economic assessments, and then on to feasibility and into detailed engineering for their Kamoa project. And anyone who's followed the story of that project as it's transitioned into production knows that the engineering that underpinned that was of course very robust. And so Chad is leading all of the various technical threads, which will come together to produce a preliminary economic assessment in the second half of this year for Central. Okay. So that's the other main area of activities.
It's a great time to be making copper discoveries and to be advancing a copper project. Copper's been over $4 a pound for a couple of years now, so close to $4.50 again. So can you put Warintza in the overall context here? We've got an emerging copper super cycle potentially underway or starting to get underway. You're advancing Warintza as a big potential copper project. Why is Warintza important in the context of the copper market we're in?
You said put it in the context of the inventory of projects and the potential for the supply side to meet this structural demand story, which is really starting to take off. The problem is that there isn't a lot of context to put it into. So this is an industry that's been chronically underfunded and unsuccessful over the last decade or so in terms of making these large scale, so I'm talking about multi-billion ton, robust in terms of grades, easily developed in terms of access to infrastructure and so on, low elevation like we have at Warintza, but chronically unable to deliver these projects. So I think Deutsche Bank put it most succinctly last year in a comprehensive study, which was entitled "The Pipeline is Empty," and that was basically an assessment of the inventory of projects that are available for the global copper industry to try and meet the challenges of this, structural demand, as you put it. It's just it's a much higher rate of growth on the demand side across this cycle, as anyone forecasts it, than the industry has had to deal with in the past. And I can give you an example. If you consider the last major cycle or super cycle that we've had in the copper industry, this would be the one that was driven, say, from the mid 2000s through the 2010 cycle by the very robust and rapid growth in demand in China, where they were putting up on a regular basis double-digit GDP growth, massive infrastructure build out, and then building out their manufacturing industry as kind of the workshop for the global commerce. And the copper price across that cycle quadrupled, and the demand that we're forecasting for the growth in is basically the green transition. So these mega trends of electrification and decarbonization and so on, that's more than double the kind of demand growth that you saw in that last super cycle.
Okay. Now, in Latin America, you're obviously in Ecuador. In Latin America, Chile and Peru are well known as jurisdictions, a lot of copper production, and to a lesser extent, Mexico. But Ecuador appears to be sort of rapidly building its credentials to join those countries as a key destination for copper production. Obviously, it goes beyond geology here. Chile and Peru have built their success on good government policy and good policy for the mining sector. How's Ecuador growing in that respect?
You mean I mean, under the Lasso administration, you mean in terms of just encouraging investment and making it a more attractive jurisdiction?
Absolutely, yeah.
Yeah, well, I mean that's the vision of Guillermo Lasso's administration. So he's highlighted. He's a conservative. He's a self-made, very successful entrepreneur in the financial sector before he ever came to politics. So he's bred in through his life experiences, dyed in the wool, kind of free market enthusiast who sees the economic revitalization of the country coming through the private sector, and most particularly through foreign direct investment in developing the country's natural resource sectors and opportunities. And so he set out goals like, for example, in the hydrocarbon sector of a doubling of oil production. He wants to see the country, which is already a regional powerhouse in terms of its hydroelectric power production, which supplies something like 2/3 of the state grid in the country. He wants to see that further developed. And then most especially, he wants to see the mining sector developed. And so his minister, Bermeo, has called this the decade of mining in Ecuador, where they want to see billions and billions of dollars of investment to build out this sector through major projects in the country, with a particular emphasis on copper. And so they've signaled this in the international press, but alongside that, they've done private outreach to all the major mining companies who would be prospective investors, of the kind of scale that they're looking for, to build out the mineral export sector in the country, to take on its regional rivals, Chile and Peru, which are the world's #1 and #2 copper producers. But it's not just words. They're actually putting this into action. Okay, and so most recently, you would have seen, in addition to the signals that they've been sending to industry and companies privately, you would have seen that they announced the mining decree in August, Executive Decree 151, the so-called mining decree or mining action plan, which laid out with specifics and a timeline all the different action items to deliver on this vision of kind of improving the regulatory regime and the fiscal regime for the mining sector. So streamlining permitting, building up capacity in the various ministries and agencies to actually process these permits to get these projects moving forward, and combating some of the potential risks and impediments to the mining sector in the country, the formal mining sector in the country. And then in addition, and this hasn't been talked about previously, but I think that this is, as these agreements get signed, I think you're going to see that the inducements in terms of improving the fiscal regime start to become public. But under the new investor protection agreement scheme that Lasso administration has set out, there are opportunities to secure significant tax incentives for new investment in the country. So if you look at, for example, Lundin Gold, which is a publicly reporting company, and so you can see, in their financials, the sort of blended tax rate that they're paying in Ecuador on their, very, very high margin gold production would be circa 37% or so. Under the new investor protection agreement regime, there's an opportunity to secure a further 5% tax discount. And I say a further discount, but because this is already a much more attractive a tax and royalty regime than you would see. For example, if you looked at Peruvian copper producers currently, they'd be paying well north of 50% taxes. And if you consider the tax bill that passed the Congress and is before the Senate now in Chile, then they're talking about taxes all the way out to 70% potentially at spot prices. And so we were talking before this, the formal part of this interview actually began about Panama, but certainly Panama is in the news with some very aggressive tax increases as well. But this isn't to pick on those countries specifically. This is a global trend that's now in place across this cycle in the wake of the kind of the fiscal stresses and debt stresses that the pandemic has wrought on these governments around the world. And they're all looking to the mining sector, which is, in the case of copper, generating robust margins at the moment to try and plug in some of those holes in their balance sheets.
Well, that's certainly true. So finally, to sort of close off, Daniel, Solaris has got more than just Warintza. You've got a number of other exploration projects in Peru and Chile and elsewhere. And you recently announced the intention to spin those off into Solaris Exploration. Can you tell us a little bit about the logic there, what the thinking is? I imagine Solaris Resources is getting a lot of attention from sort of the big corporates in the copper space and the diversified space. Is this partly to help prepare the company for a potential or an eventual sale?
It's basically a recognition that we can't hope to capture the value of a project of the scale and kind of robustness of Warintza in one company. So if you look just at the range of estimates that equity research analysts have provided for Warintza Central, and they're coming up with drill indicated resources in a range of, say, 600 million tons to 1 billion tons, and certainly our expectation is that we'll be through these numbers with a decent buffer, but but they're coming up with valuations of $2 to $4 billion US. That's just for Central. So that's not taking in the discovery that we made at West, East, South, with further targets to drill at Yowie, Kaya, and more coming. We'll have an update about the next set of targets that we've defined as well coming soon. But that's not taking any of that in, or even the growth potential at Central. And so it's a tall order in the market to try and capture even fair value on just that. And so it certainly becomes a case where you're simply going to be sacrificing the further potential beyond that in Ecuador, in the land package that we have in Ecuador, beyond that immediate development opportunity within the Warintza porphyry cluster, where we've got a number of other targets. Indeed, we've got other properties as well, let alone the rest of the property portfolio, which includes some very exciting projects in Peru, which are early stage. These are pre-discovery projects. But these were David Lowell's targets when David Lowell passed away in 2020. These were his targets for his next series of discoveries, where in both cases you've got outcropping portions of the deposits that he saw the potential to make discoveries from with drilling. And then also some very attractive projects in Chile, where, for example, on our Ricardo project, we'll be meeting with Freeport very soon to hear about their exploration plans for that project soon. So we may have an update on that. And then our Verde project in Mexico, which is often overlooked. This is a large inventory, bulk tonnage copper deposit, modest grades, albeit, but well located in terms of infrastructure and so on. And that we think will certainly have a future and more interest as we get deeper into this copper cycle. So there's a lot there. And we've recognized that we can't surface all of that potential in this company, hence the need for, Solaris exploration to preserve that value for our shareholders, to distribute, 100% of it to our shareholders for a life beyond the Solaris core opportunity.
Well, thank you, Daniel. It sounds like there's going to be no shortage of news and catalysts to come throughout the year. Unfortunately, that's all we have time for today. Solaris Resources trades on the TSX under SLS and on the OTCQB under SLS SF. Daniel Earle, President and CEO, thank you very much for joining us today.
Thanks so much, Paul. It's always a pleasure to speak with you.
And that's all from me, Paul Harris. Join us for more from Mining Journal soon.